Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today by a really fun guest. We've got Henry Corell, the founder of RevUp Rental. Henry, welcome to the show.
Thank you, Jamie. I'm excited to be on. I've been watching your series. I love it, so I'm happy to be a part of it.
Yeah, so I love digging in on revenue management strategy, and you founded a revenue management consultancy company. So I'm really sort of excited to dig in with you, but maybe just start like for those who don't know you and don't know who RevUp Rental is, could you give me a bit of background of how you got into short-term rentals, how you got into revenue management, and what you do today?
Yeah. So just a quick little background. When I was in college, I was always interested in real estate, and a buddy of mine started working for just one guy out here in Scottsdale, and started doing a short-term rental vacation business. And then he told me a bit about it. I was interested. I asked to shadow him one Sunday, and we just checked out homes and picked up trash. And I was like, this is awesome. And then a year later, I was working at Starbucks, and he called me and he was like, hey, do you want a job? And I was like, yep. And so my first job was working for the property management company. And I remember just literally walking to class on my phone, dropping rates by $1 because it was before dynamic pricing or anything like that. And you would see an uptick in the bookings literally right after you drop everything by $1. But after Airbnb, VRBO did the same exact thing. So then we grew that company up. And then as I was in there, I saw that revenue management was very niche and unique for our industry. And even like I worked with hotel revenue managers that knew the terms, but it was like almost a completely different beast in the behavior. Just not knowing supply is one example. But so saw a need for that. Then decided to break off and provide my service and help out other property managers looking for the same help, especially after 2022 when it wasn't as easy to collect cash, you could say. But yeah, so then I broke off, started RevUp Rental, and now we're helping multiple property managers across the country, all the way from Canada to Norway now. And so we provide revenue management service. It's been a great time. I've learned a lot, especially with digging into different markets. It's been very interesting to see different behaviors, especially with the changing behavior of the market in general over the years. So there's always something new every day.
Yeah. So I'm going to start with a really basic question for you, because maybe a lot of listeners don't know what you mean by revenue management. And like I talk with a lot of people and they're like, and I do revenue management. I signed up for Price Labs or Wheelhouse or Beyond, and I like connected my listing. I went through and set some settings. Like I set my minimum stays. I maybe even like have them vary by lead time. Like I'm using it all. And I set it, and now it just runs. And like now I'm doing revenue management. Like, what do you do?
I do more so in that sense. I add a bit of forecasting on top. So, using different data points, trying to make decisions, calculated decisions before it's too late. And that's what I see a lot of what people are typically doing is, they bought the pricing software, set and forget it was working, but then all of a sudden bookings are down. What's going on? So where I come in is basically, I look at different data points. I read different data points. I dissect their information a bit more, and then offer them valuable insights to that respect. It's more in that sense of forecasting role, you could say, more than being kind of reactive and then just kind of reading the data and being like, oh, this is just how it is. It's more like, okay, how do we get ahead of it? I'm seeing these signs. Here's the actions we need to take.
Yeah. So as you think about forecasting our industry, and it's something I think about a lot, like, and because that's what economists do, right? They forecast the future. They try to like connect external data points. So what's happening in the broader economy, what's happening in other sectors of maybe lodging, and use that to get a sense and even like use our own industry-wide data of like, what do forward bookings look like? How do those compare to prior year? Like, are bookings up? Are they down? Like, do we see lead times changing? Are they shortening? Are they expanding? Like, what is guest sentiment? What is consumer sentiment? So, as you think about forecasting our industry, what are your favorite metrics to sort of follow?
Ooh, that's a deep question. There's a lot of fun ones. And if we're talking outside of our industry, is that
Yeah, let's start outside. Yeah.
outside of the industry? I love just watching economic trends with consumer behaviors. We got to remember we're selling a product and our client base, our demographics, they're different for what type of asset we're selling, whether it's a higher end home versus an affordable apartment. Looking into kind of just, economic trends, personal savings, uh, debt, consumer sentiment. I know you follow that one closely. That kind of gives you insights on people's confidence looking forward. And then also a one that I follow closely, which is outside of our industry, but I feel like isn't, is airline trends. That's kind of a telltale sign of kind of shifting consumer behavior in regarding to travel, just some of those things.
Yeah. So, how are you feeling about the future of short-term rentals booking? Like, and we've seen a lot of volatility in consumer confidence. So it feels like it's swung. And beginning of the year it was pretty high, and starting around February, it started swinging lower. And then just last month we saw one of the biggest increases in consumer confidence, though it was off of a pretty low base because of what's happened prior in the year. So we've seen a ton of sort of swings. How do you feel today? And we're sitting here at the beginning of July about and sort of booking trends. So how someone should be thinking about the rest of the summer is going to come in.
Yeah, so the rest of the summer, it's interesting. I feel like people are just more hesitant to make those decisions. The other thing too, with all of the unknown, is it factors into group bookings, because then now you need a bigger group to all feel the same way and be okay with spending the dollars to book that. So through the summer, I've been cautiously optimistic, I would say. Definitely pace has been behind in occupancy in a lot of markets, but we've been seeing more last minute pickup. I mean, it depends on the market and the asset type. Smaller units typically have been seeing last minute pickup, but conservatively optimistic, I would say. Yeah, so it's I look a lot also like 12 months into the future, repeat bookers. I feel like that's a kind of a big sign too, with everything going on. So if you start to see those return bookers not really coming back after reaching out, you can start to see kind of trends or maybe shifts in your strategy that you have to make to kind of compensate for those.
I totally agree on the sort of cautiously optimistic sentiment, especially since it's been so volatile. Where do you typically see sort of strength or weakness, like, first show up in the data? Like, is it in lead times? And I'm talking like in the short-term rental data. Is it in lead times? Is it in weakening historic occupancy? Like, when you're digging in and looking at someone's property, what are the things you're sort of looking at first to get a sense of like health of bookings at that property or at that property manager?
If I jumped right into a portfolio that I didn't know, first I would look at the internals and hope that they had some year over year information. And then also I would look at market pacing with occupancy, not so much ADR, because I mean, we could get into dissecting all the different data and how they get data, but occupancy, just looking at general occupancy trends can kind of give you some insights on kind of what's going on in the market. Also, I mean, there's a ton that we could go through, but occupancy is that number one that everyone knows. Year over year pacing. It could also reflect the shortening booking window, like I've seen in some markets where there's just a gap when the typical booking window would be in year over year, but then it starts to catch up. So that's part of the casually or the cautiously optimistic part, is where it's I'm cautious because I don't want to leave any units vacant, but I'm optimistic because I am seeing last minute pickup and seeing some last minute solid bookings. And it really depends on your asset type too, like what you're selling. You got to check out what type of unit you have compared to the market. So like looking at market data, take it with a grain of salt. I like to use trends with market data, not the whole numbers. Like I'm not like, oh, 2-bedroom condos are asking that or getting this ADR. I'm going to make that ADR. I'm going to say, oh, what was it last year? Oh, it's 10% down this year, just for hypothetically speaking. Maybe we need to be a little bit more conservative from the original thought of what we thought we were going to capture. And then also it gives us insights on, hey, if this is what we're seeing with occupancy, let's try to push out and get some more bookings. Let's advertise rates attractively now. So it's keeping on top of that.
Yeah. And when you're getting in, because assuming, and if you're working with sort of larger property managers, they're doing this, right? Or they might not be doing it well, but they are sort of looking at it. What do you typically see that and the operators are missing that, and when you dig in, you're able to uncover? Like, is it just that they were setting and forgetting it and it just takes someone to look at it? Or is it in time and effort? Or are there things that you think you sort of can shed light on that they maybe aren't sort of focusing on?
I guess people maybe underutilizing abilities, not attacking seasons how they should. Length of stays are a big one too, that when I come into large portfolios, I'll see everything kind of just standardized where they'll just have a flat like 4-night minimum, 90 days, that sort of thing. And when I come in, I'll be like, okay, here's the seasonality. We're going to be conservative here. Here's the average length of stay. Here's the average length of stay trends. I even have an example of where year over year, the length of stay has been shortening, and we're already seeing it now. So I will go to a client, hey, September, let's just test it out. Condos, 3-night minimums. We'll bump up the Friday, Saturday, and let's just see if we get any traction. It does take like a couple weeks to see if, there is movement, especially depending on how far out the dates are. But I would say just underutilization of tools. And then also a lot of times it's almost like being the dead horse. But what I see a lot is just reactiveness. They're just waiting, and then they see, and then typically it's too late. And so then they react a little bit too late instead of trying to get ahead and taking a little bit of risk, which actually might be less risk than doing their traditional ways of just, this is what this home should get. It got last year. Let's set it for until we get within the booking window, when in reality that might not be the smartest plan of attack, you could say.
Yeah. And in general, like when you look at and the sort of markets you're analyzing most often, like, do you feel like the market is healthy in terms of overall bookings? Like I know you said like it does seem like bookings are coming in just maybe more last minute. Like, how do you sort of grade the overall health of the industry right now as sort of you see it?
So it's interesting because there's most markets I am seeing a big drop in occupancy year over year. Some markets, like let's say St. Louis, they've had so much regulation to where they're having their best year yet because units are falling off. So it's like market by market, and it's very interesting in that sense. But seeing that the occupancy is going down, I let my clients know, if that's the case, that we are probably going to need to be a little bit more competitive with ADR. The solution to revenue is occupancy. And so we might just need to take a hit on ADR, but we're going to shoot for the same RevPAR or the RevPAR goals. But we might just need to get there through occupancy, with being the most attractive and also trying to get as much far out bookings as possible. I'm happy to say that we have been doing pretty well with year over year occupancy numbers internally for our clients. So they've been happy. The ADRs are slightly down, but they're getting bookings are getting heads in beds, and it seems like that has been a much more safe and or a much more safe way to attack, I guess, this uncertainty and with everything going on in the market.
Yeah, I just pulled up the St. Louis data as you sort of mentioned it. Like, occupancy is up like 5% year to date. Like, it's almost up to like COVID levels, 2021 levels of occupancy. Like, it's crushing it.
Yeah. Yeah. And like I have a market in Florida too, and we beat their June for their condos by like 5% in occupancy, but the market was down. It was just over 10%. And so like they're really happy about it. The RevPAR numbers we're trying to keep in line. But no, it's really shooting for it. But yeah, St. Louis was an interesting one. It was those homes are just like booking themselves. It feels like 2022 over there. Yeah, that one's been great. And then also like, with the different asset types, I have some other condos where it's like, if you just looked at data, you would be making these rash decisions. But if you look in the market, like just going out and searching on Airbnb, you can find out like how high of quality your product is. And a lot of times those high quality products, there's, a demographic that isn't getting hit as hard economically that likes to book those higher quality products. And so sometimes in some cases, I'm even raising the rates last minute if I know a weekend's going to get booked out. It's running a little bit of a risk, but so far it's just proven to work. It's proven to work out. And it's not like I'm leaving all the units are vacant until the last minute. It's a steady pace. Like if we have 1 or 2 units left in a building, then I'm like, okay, we can probably push these up a bit. But yeah.
That's another sort of question I had on sort of revenue management of like, how much are you looking at like market trends and specific property trends versus like analyzing the comps and thinking about like, all right, there's still 10 properties left to book in this listing comp set. Like typically we see like 4 or 5 come in, like, and the likelihood of getting booked now is actually pretty good. So we could still push rate, or we should at least cut rate. Like, is it broader market trends, or are you actually creating comp sets for each listing that you're analyzing on a regular basis?
It's a little bit of both. And it also depends on which, you could say, key stakeholder you're translating the data to. So overall market trends are great because it can give you a sense of just what's going on. And then the more specific comps really give you insight on, what they're booking at, if they're booking, if you should be booking. Then also what I like to do with specific comps is I like to look at their listings, and especially if ours is pacing behind, just finding like some amenities or anything like that. Maybe there was a bad review, something along those lines. Maybe the comps are offering pets and our listing is not offering pets. So that's where you can get a little more granular with the comps. And then the higher level market overview gives you like much more of a trend. But I don't like to do like huge markets. I'll do like a city at a time and try to get as granular as possible with that, because data can just get skewed left and right, even if you just add a city next to it. So it is, looking at the high level, it's a little bit of both, I guess. You'd say it's a mix. So high level gives you an overview. Usually if we're translating this to the operations team, that's kind of what they want to see. Hey, occupancy's down 10% year over year, because they're the ones talking to the owners. And then for our team, it's like, okay, this unit's underperforming. Let's look at the comps. We know this is happening in the market. What are the comps doing? How are they adjusting? What do they have? Did they update photos? That sort of thing.
And how much typically is it that there's like an actual like property issue that's causing the weak performance of like, all right, like you're running $200 and last year you had a 4.9, and I'm struggling to get you $150 this year because you now have a 4.6 review score. Your last 5 reviews are terrible. Like you need to fire this cleaner. Like there's not much I can do for you on price to get this unit booked.
Exactly. Yeah, no, that's always a huge thing. And that's something that we do with those struggling units. We'll look at the listings, we'll check the reviews. And a lot of times we will see a review, the most recent review, and it's just horrible. And it's like, okay, this might be affecting things. But you could also look in the search order, like on Airbnb, and typically it'll be right at the bottom. But another thing is that if it has a poor review, like people are going to be wary to book. Like they're not going to want to, risk having a bad experience. So that really shuts you off. The other thing too is the conversion rate. That kills your conversion rate. People click into the listing and then maybe they read, there's rats in the walls or something. And then, then they click out. And then the more that happens, the more, the OTAs start pushing your listing down. So there's a handful of like factors. Like I would always explain it as like revenue management. Yeah, we price the vacation rentals, but our hand's kind of in everything. Like it's in operations, it's in marketing. Like we talk to owners, we talk to the heads of the business to give them insight and direction. But But yeah, it is interesting in that aspect. It's a little bit of everything.
Yeah. Is there any tools or softwares you've found that it's like makes it easier to analyze like reviews, rankings, like things like that? Or is that just like this is part of your sort of listing that you're going on to Airbnb, maybe in incognito mode and like seeing the ranking of that listing, going on Verbo, going on Booking. You're reading through the reviews yourself to get a sense, or are there any efficient ways you've found to do that?
So I have tried out with just like Claude scraping and Airbnb link. That seems to like work in some cases. That's been really great. So other ways that I do, or at least identify without seeing that it's underperforming is like days since the last booking. Like if it's coming up on 30 days since the last booking, there's something going on.
Yeah.
And so going in there and diving into that, like will reveal a lot of things, whether it's a bad review, the photos haven't been updated in quite some time. Recently, one of the situations where it wasn't like we were priced very attractively, but the listing hadn't had a booking in about a month. We went in and we noticed that it didn't allow pets, and it was one of the only listings in the area that didn't allow pets. So like we showed them like, hey, on Airbnb, here's the search. There's 600 listings. Here, if you put add pets, it goes down to 200. Looks like a lot of people are booking homes that allow pets. You're cutting yourself off. So there's like instances like that where it's not prices that need adjusting. Like in a lot of cases, especially with the bad reviews, we could set it to $0 and people still wouldn't book. It would still go vacant. And like we've seen it. Like it affects things. The guest favorite now is huge. That is everything on Airbnb. And it's really taking advantage of that algorithm. It's, you need to be pushed up. Airbnb is Airbnb is a company. They want to advertise the best looking listings, the listings that people click into and book, the listings with like the highest value score, the cleanliness, the best experience, that whole sort of thing. The value score is a funny one too. That one, depending on if you're like in a property management business or not, that one I always thought was interesting, because when I worked for a property manager and it was like, yeah, your guys' value scores are wrong, I would be like, does that mean I'm doing a good job because they're paying more? Like, but then it's like, oh no, the sheets were dirty. Like, and then it's like, guys, okay. Yeah, no, but it's funny. Just like the communication piece is huge too. That's like, people think of revenue managers as people that just sit in caves, and we kind of do. We like it. But it's also like we need to be able to communicate and translate the correct information to the correct key stakeholders.
Yeah. No, I love the value score and trying to interpret it.
Yeah.
It's
I was like,
I think
I'm doing it.
yeah, like I want it to, like a 5.0 value is not a badge of honor.
Yeah. Yeah, that's a good point. But that's part of the ramp up period too with new listings. You want to like give a little incentive, cheaper rates, because then when people book it, they think they got great value, they leave a great review, and then your property just takes off running.
Yeah. Absolutely. Are there any other things in sort of that vein you talked about, like, and being pet friendly, guest favorites, like, uh, short-term rentals have changed so much over the past 5 years. Like, are there any sort of other obvious things that maybe you see as obvious that maybe a investor or host just getting started might not see as obvious that they should be thinking about, like as they're sort of listing for the first time, that could make a major difference on bookings?
Yeah, I mean, if any amenities that you can add, very high quality photos, that's huge. I'd recommend to our clients to, if they can, update their photos at least once a year. Higher quality photos come out, different styles come out that appeal to people. And yeah, those are just some of the amenities if you were talking amenity specific, alongside with the pets. Pets is huge. And then garages, parking spaces, that's also a big one. And yeah, so those are a couple of them.
How do you feel about cancellation policies?
Mm.
Because one, I think it's hilarious that like strict on Airbnb is like flexible on Verbo, in terms of like their like thought on like the same essential cancellation policy. But is that something you typically see that can actually impact how someone's bookings, or is that more like more of a preference on how risk tolerant you are of having a more flexible policy?
That's like exactly it. It's like how risk tolerant are you? So like a lot of times if I'm ever giving advice on cancellation policies, if it's, a very large home, a little bit more strict, we want people to book it that intend to stay. And also there is a bigger opportunity loss or cost, you could say, if they decide to cancel. So that's kind of how I would cater it for those, especially like long terms. And then I would look at market. There's ways you can find out average. I think through AirDNA too, you can find out cancellation policies in different markets, which is killer. And like even just looking at that, I had one client, they had it on more strict and they were like, what can we do to get better, visibility on the OTAs? And just simply looking at that, I was like, let's test this out. Let's just take it down to moderate. The market's at moderate, like in bulk. So, we aren't really pushing ourselves, out of competition. And I don't think we need to go to the most lenient policy just because I'm seeing most of the competitions here. So I think it would be, a low risk option, and we could see if listings start to take off. Cancellation policies are interesting though. I feel like they're always changing.
No, it's and I also feel like they're so market dependent. Like,
Yeah.
your sort of thought on cancellation policy should not be and one sort of policy fits all. Like,
Right. I always wanted it like they should set like date parameters or at least a dollar amount parameter just because, there's so much risk associated. But I think they collect the service fee no matter what. Correct me if I'm wrong. But so maybe maybe they
and
just
then, yeah, like Airbnb was started urban, competing with hotels in urban markets, and it's still, even though the inventory has moved more towards vacation rental markets, more towards small and cities, like it still has a very like urban centric cancellation policy of like, oh, like you're likely to give, and you can let people book or cancel 3 days beforehand or 2 days beforehand. Like you'll still
Yeah.
get rebooked. Don't worry. Like
we
in
got
most vacation rental markets, that like it's just not possible to get rebooked like even a week beforehand.
Yeah, I have a fun story with that one. And during the Super Bowl when I was out here in Scottsdale, we in October, or it was September, I think, we were like, hey, let's think about switching up our cancellation policy. And one of our nicest homes got booked for it was like $80,000 for the weekend. And their cancellation policy allowed them to cancel 2 days before for a full refund. And so I was kind of freaking out, and I would check in with like customer service and our reservations team. And I would be like, hey, each month, reach out to them, see if they need anything, give them a free, early check-in, give them a free late checkout, whatever they need. Let's keep this booking because it's high risk. And like, if they canceled a week before, I mean, it was the Super Bowl, so we probably would have gotten it rebooked, but it was just one of those situations where it was like the cancellation policy kind of like created more work for us and a little bit more stress. But like, the owner sees it and they're like, oh my gosh, this is insane. But if that cancellation goes away, then they're like, not as stoked. And then they're like, we got a week to rebook, maybe for a fraction of the price. And so it's the cancellation policy will always be a push and pull with figuring those out. Are they creating more custom cancellation policies on the OTAs? Do you know?
I've seen Verbo offering more, especially if you use a property management system, but Airbnb is still being very strict in terms of what the offerings are.
Got it. Yeah. I understand that to an extent too. Keep everything, just kind of linear and kind of like takes the headache away. I feel like operationally wise, like that would be sort of a headache too, to an extent, knowing which units like have a certain cancellation policy. But that all that stuff is interesting and going to change every year, I'm sure. So yeah, that's something to stay on top of and know how to adjust and when to adjust.
Yeah. So, Henry, this has been a fun conversation. I've got two more questions for you. One I actually used to ask pretty often on the podcast, and I haven't asked it in a while, but I feel like you're the perfect guest to sort of ask this one. And we sort of talked about it briefly in terms of favorite economic metric, but I want to know, like, what is the one thing you're looking at every week as a revenue manager? It could be short-term rental data, it could be economic data, but is there sort of one metric you're keeping up with, and what is it?
The one, okay, so it's, yeah, there's a lot, I guess you could say, but I guess like some of the top would be like, if we're talking specifically revenue management, something I just keep an eye on is I like to look at just bookings made each day. That's like, I mean, a super basic, simple one, but if you continue to do that, you start creating the trends in your head and you know if you're slowing down or picking up. Um, if we're talking about with operations, I think letting them know, seasonality to an extent and like number of check-ins or ahead or expected, so that they can mentally get prepared. So they can be not just mentally prepared for that time, but then everyone can also be prepared, like, with how much supplies they're going to need, how much they should be expecting phone calls, that sort of thing. Yeah, that's an interesting question. Which one metric, if I could only have one metric to look at, it would probably be a higher economic side metric. It it would be like a broader view. It would be looking at basically just going on Fred, and looking at, consumer sentiment. That's a huge one. I feel like that's just explains the confidence in people and whether they're going to decide to spend money on a vacation or not. Maybe this year they hold back, that sort of thing. And then also I like looking at personal debt, disposable income. That's huge too, because we are a luxury product. So if people have less disposable income, like if their cost of living is rising in comparison to their take-home pay, that's something to think about. Like sorting by age demographics too. See, I'm just going to keep saying a bunch of different ones, but we'll cut it and we'll just pick one. I'll try to decide on one. No, but it is kind of like, this is where I kind of differ from a lot of other people is those higher level economic trends. I try to get granular with those, but those really tell you like what to expect in the market. I feel like all of the market data that we get through all of our different vacation rental softwares is all, nothing is really predictive besides looking at trends year over year. With different economic models like the consumer sentiment, you can know if people are going to be, less likely to spend money or if they have less money to spend. Like we had a big demographic of, people between 20 and 35 booking some of these condos in Colorado. And right when student loan payments started to kick back in, I found out that it was about 10% of their take home pay. And I was like, that's probably going to affect some things. And you could see it in the data, the drop. And so like, it's interesting, like, just knowing, like, I like to know about what our supply is, and I like to know who our consumer is. Like, what are we selling and who are we selling to? I guess that's two different things, but they kind of tie in together. And that's like a big and major thing that keeps kind of you ahead and then also keeps you up front with just different economic factors affecting our market and potential market behavior in the future. And then, yeah, there's more, but those are some big ones that are just high level. I mean, you get granular with it, but yeah, I'd love to hear your favorite economic trends to follow. That's what we really want.
We're coming up on Jobs Friday. I love the jobs numbers.
Yes.
I feel like there's no better indicator. And I've always said, if people have jobs and they're generating more income than year prior, month prior, they're going to keep traveling.
You told me about that before Darm when we were talking, and I started looking into that, and it opened up my brain to looking into my different markets and not seeing if they're flying or driving, but seeing which season is flying, which season is driving. And so like with the airline information, you can kind of make assumptions for that season about, what's going to happen there. And then also, gas prices, disposable income, that whole thing. But yeah, I know the job one is huge, and you opened my eyes to that. So thank you for that one. But yeah, that is definitely an interesting thing to follow. What have you been seeing?
And jobs have been holding up. They've been slowing growth. Like, and last month, I think it was 130,000 new jobs were added. And and maybe a year prior, we were running like 250,000 new jobs being added. Um, Natural sort of population growth means that we need to see about 100,000 new jobs being added each month to sort of keep unemployment flat. So
Wow.
if we now, and as we've been slowing overall job growth, if we start to see it dip below 100,000, that's when you're going to start seeing unemployment probably start to tick up. And that's potentially when you start to see some hesitation in the market. Because if new grads aren't getting jobs, if there's now not the tight labor market that we've seen over the past few years, that and people aren't getting the raises they were because employers feel confident that people aren't going to be looking elsewhere, that they can get away with a 1 or 2% raise versus a 3 or 4% raise from years prior. Like that all plays into consumer sentiment and whether you're going to do one trip this year, two trips, or more.
Absolutely.
And also like how much people are going to splurge. Because travel is really an aspirational product. You're typically staying in a home or staying in a hotel that's nicer than what you live in. And people like to splurge when they're on vacation. And one of the biggest sort of leading indicators that we're going into recession is when you start to see trade down in terms of the product that people are booking. So if you start to see that people were booking luxury homes and now they're booking upscale or mid-scale properties, like, yeah, you still have your job, you're going to take that trip. But if you're feeling less confident that you're going to keep that job, then maybe you pull back a little bit on spend, make sure you can save a little bit more for that rainy day. Where when things are going well, you're getting big raises, like everyone's feeling good about the economy. It's like, let's go all in. Like we're only going to take 1 or 2 trips this year. And when we're going to do it, let's go big.
My bonus is hitting the end of the month. Let's go. But yeah, no, it's definitely switched. It's been interesting to see, like, some of the bigger homes are still capturing high demand. And then some of the larger bedroom count homes, I should say, that aren't as high quality. I've been seeing a bit of a drop there just in demand because I think that was kind of like the budget group. And I think that those groups are starting to get smaller. I actually did some insights on cancellations and why people were canceling because I had a theory for that. And then most of the cancellation reasons that I could get were because it was like, oh, we booked this, but we couldn't get everyone to go as much as we want, or like couldn't get the group size. So we had to cancel and get a smaller place. And so, yeah, no, that is interesting. Yeah, no, the economy, it's just it's fun. And our jobs are so much fun trying to predict tomorrow with that. Yeah.
So Henry, last question.
Mm-hmm.
If people want to follow you, learn more about your company, how would they do that?
You can follow us on LinkedIn. We post there regularly. We also have a website. You could reach out through our website. It is getting updated, but the website is just www.revuprerental.com. And then my LinkedIn for the company is RevUp Rental. And then my name's Henry Corell, Corell. It's a hard one. But you can find me there. Yeah.
Awesome. Henry, thanks so much for joining.
Jamie, thank you so much for having me on. Hopefully we can do this again sometime.
Yeah, absolutely.